Hey everybody, welcome back to What the Bleep is Happening with Mortgage Rates. I am Michelangelo Floridino and we are here with Tim Lawson, Annie Mac Home Mortgage. Welcome back, Tim.
Hey, good morning, Mike.
How are we doing today?
Doing great. A little cold out there.
A little bit. So I heard the Fed met this week to discuss some rate changes. Can you elaborate on that?
Yeah, so, there's a lot of misconception out there because although the Fed increased rates again this week, they increased it by a quarter point, but that was anticipated by the market. So it was already kind of baked into, what mortgage rates were at currently, as well as the stock market and everything. So there was no big surprise there, with what the Fed announced.
Right.
But the big news was the, Fed Chairman Powell always has a press conference after the meeting.
Yeah.
And he acknowledged that the fight against inflation is going pretty well. They're seeing some of those inflation numbers come down. And as we talked about, inflation is really the driving factor behind these high rates right now. So that was positive news. That was a good thing. That was kind of a win for the mortgage industry and the real estate industry.
Right.
Because we saw a nice improvement in mortgage rates, even though the Fed raised rates.
So just to be clear, when the Fed raises rates, that doesn't mean an automatic increase in mortgage rates?
That's correct, yeah. The
Okay.
Fed, the rate that the Fed's talking about, it's the federal funds rate. It's the rate that banks lend money to each other overnight, to cover deposits that they have. So with the mortgage rates, they're not tied directly to that. So as long as it's really the news, like so when Chairman Powell comes out and says certain things about the direction or
Right.
the strategy that the Fed's going to use to continue to fight inflation,
Yeah.
that's really what we're going to see move rates. And it was a good week as far as that's concerned.
Okay, that's great. How do rates look today, do you think, compared with last year? I mean, are we, trending in a good direction? Do we see like something positive coming down the highway?
Yeah, no, that's a great question, Mike. So yes, we're continuing to see rates trend downward. We're at the lowest levels we've been since mid-September of last year.
Oh, wow.
So that's great news.
Yeah, great news for your buyers out there looking to get back in the market.
Absolutely, yep. And we expect rates to continue to come down. In May, we think we're going to see a nice improvement. There's going to be some of the metrics go into the inflation numbers. Some of those higher levels are going to drop off when we look at the year-over-year
Right.
calculation. So that's going to be that's May 10th, a big day.
So is that when rates really started to go up last year, around that time?
It was earlier than that, but it accelerated. So February, March of last year, we were still down in the threes.
Right.
You
Yeah.
know, and then things really got out of control.
Okay.
And it really was the concern with inflation.
So in May, what you're saying is that year-over-year increase might be a decrease because that's kind of where we were starting to peak.
Yeah, so it's not so much that it's going to be a decrease, but it's going to be shrinking more.
Okay.
So the inflation will still be there,
Right.
but it won't be at such a high level. And there was some readings that came out,
In May.
June, July of last year that really threw things out of whack.
Right,
We'll see some of
right.
that drop off. So it's going to be, we're already seeing good things happen.
Yep.
But we expect in May that, even more positive things.
So that means lower rates for you.
That's correct.
All right. Well, thanks for joining us today, Tim. I really appreciate it. I'm Michelangelo Floridino.
I'm Tim Lawson, Annie Mac Home Mortgage.
Have a great day.